My name is Fawad Razaqzada, market analyst with Think Markets. In the room is also my colleague, Victor. Hello, Victor.
Hello, Fawad. My name is Victor Golovchenko, and I'm a macro analyst at Think Markets.
Thank you guys for joining us live. We are going to start the live market analysis webinar shortly, but before we do that, your favorite slide is on the on your screen right now, the risk warning. Please ensure you read this, as it's very important. It's for your own information and for your safety, because trading is risky and involves all sorts of risks. So please make sure you're aware of those risks. We don't provide advice in these webinars, and our ideas are for general
Even
information.
if something seems as an advice, it is not, guys. Don't take it too hard.
Yes.
We're just expressing our opinions, and we're just discussing what we think is very important for the markets. However, your investment decisions are your own. So
yeah.
With that out of the way, have a scan through the disclaimer.
Yeah. Spread betting and trading CFDs carry significant risks and are not suitable for all investors. So that's very important to note. That said, you are aware of, you should be aware of our weekly webinars by now. What we do is we talk about fundamentals very briefly, but this webinar is mostly technically driven, and gold is catching my eye at the start of this week. It's looking quite strong from, I would say, from both technical and macro fronts.
It's nearing also that key technical resistance, isn't it?
Yes. So gold, this is the weekly chart of gold. After hitting a record high in, I think it was August of last year, it has spent the best part of, well, more than a year now inside this bull flag or bearish channel, depending on your view. I think this is a long-term bull flag, which is a continuation pattern, right? So the trend in the long term has been bullish for gold in the very long term. And usually when you see big moves up like this, there is going to be a period of consolidation. And I think that period of consolidation is about to end. Yeah. So what we need to see now is... A year and a half. Yeah, that's a long time, isn't it? A year and a half of consolidation.
Yeah.
I reckon it's going to break out to the upside. And I'll tell you a few fundamental reasons, but firstly, let's consider the technicals. So the technicals look positive because on this time frame, because well, one reason, the retracement from the record high ended at the 38.2% Fibonacci retracement, which is a shallow pullback. Okay, so that means that in the grand scheme of things, the buyers remain in control. They only give back 38.2% of their gains from the record high. So not a significant amount. So put another way, the sellers could not push the price of silver down beyond the shallow 38.2 Fibonacci retrace.
You mean gold?
Did I say silver?
Silver.
Yeah, not gold.
Yeah.
Silver is my favorite precious metal, so that's why sometimes I talk about
poor
silver.
Man's gold.
Poor man's gold, indeed. I can't afford gold. Yeah, so that's the situation with gold. It needs to break through the resistance trend of the bull flag to confirm the reversal, or what's the right word that we use here? The confirm the continuation pattern has completed. So a break above these highs at around 1835-ish, I think, would be the trigger for the potential breakout. But we've already seen some bullish price action within the channel itself. If I zoom in a little bit, you can see that there was a bullish engulfing candle on the weekly chart of gold last week. This happened despite the Fed announcing tapering, which means, therefore, that the Fed's tapering plans were fully priced in when they announced it. And with a few central banks surprising on the dovish side, like the Bank of England, the Reserve Bank of Australia, and not to mention the continued dovish rhetoric from the European Central Bank. It looks like
there's been sorry.
Yeah, I was just going to say that it looks like the conditions for monetary policy will remain as they were previously, very loose, which should be
very
good news
accommodative.
For
very good news for real assets. Very bad news for those that don't own a home still.
Yeah.
Because those real assets continue to appreciate, and these inflation figures that we're seeing are really getting on the nerves of people, while central banks continue to stay on the sidelines and support this credit expansion cycle that we have been looking at since the depths of the beginning of the COVID-19 pandemic back in March 2020. So speaking of fundamentals about precious metals, what I can highlight is that we are approaching key resistance levels purely thanks to the fact that the Fed didn't surprise the markets with a more hawkish rhetoric as some people were expecting. In fact, they have been pretty dovish and pretty behind the curve, I would say, as usual, as a typical central bank. They haven't pledged to be more aggressive. They say that they remain data dependent, and as recent data has shown, for example, the jobs numbers that we have just observed late last week, those numbers were really, really good. However, they're not sufficiently good for the Fed to accelerate their pace of tapering asset purchases. So with that in mind, gold continues to march higher, just as we discussed that will probably happen during our webinar on Friday. And what we have also seen is silver. If you can switch over to that chart.
Sure.
Yeah. So silver has been falling. It's not any different. While gold levels are around 80, key levels in gold are around 1830. Those in silver are around 2480, or call that 25 really.
Yeah.
Because we will be approaching soon the 200-day moving average, which is also a very crucial technical indicator. So looks like that once again silver and gold are trending in the same direction, which is usually bullish.
Yeah, indeed. And it's not just these precious metals. I mean, if you look at platinum and palladium, this is a platinum chart. It's broken its resistance trend and started to push higher in recent days. I think this is palladium. Palladium is not as strong as
palladium. Has corrected somewhat. It's been one of the key industrial metals over the past couple of years, purely due to the fact that it's widely used in catalytic converters in automobiles, and with the new ecological standards, these are there is more and more demand for palladium.
Speaking of base metals or industrial metals, copper.
Dr. Copper. How is it going?
It's looking quite decent. I mean, it came up to hit its 2021 high a few weeks ago. Just came short of that, and then it pulled back quite sharply. Now it's kind of finding support around the 200-day moving average and the backside of the broken trend line. It's found support for the last 3 days here, and it looks like maybe the weekly candles might look a little bit positive. I mean, previously there was a head and shoulders reversal that didn't play out here, which we highlighted as a region that it might go up, which indeed it did, but it took its sweet time. But now it's trying to point
to form a base around 430-ish.
Yes, yeah, 430-ish.
That's been the land of this in the sand over the past couple of weeks, and previous resistance that has turned into a support level.
Yeah.
With all that said, with all that bullish stuff said about copper, the major headwind for this metal is how will China manage to tackle its slowing economy, and namely its real construction sector and real estate.
Indeed,
something that a sector that is really using a lot of these base metals. So that is something to watch out for. And despite relatively decent data out of the developed economies, there is something of a more worrying story in China, as the authorities down there aim to engineer a soft landing of the
economy.
Drastically overheated Chinese real estate market, something that has been really, pushing global commodity prices higher over the past decade.
Yeah, just as you speak about China, I brought up the manufacturing PMI of China for the last several months. You can see it's been declining. Activity is slowing down already in China. Is this because of the actions of the government?
Well, the decline is much lower because of the actions of the government. That I can say for sure.
Yeah.
But in general, we have
seen the supply bottlenecks as well, isn't it?
We have seen. Well, I think we're at the beginning of actually seeing a paradigm shift in supply chains.
Yeah.
Something that has not been really widely discussed as to how we're going to solve our supply chain problems. Developed economies have highlighted their dependency on Chinese manufacturing over the pandemic. You remember all those shortages with masks. Now we have shortages of magnesium, which leads to a shortage in aluminum. And this is something that I'm not even starting to speak about rare earth metals, which are mainly focused, whose production and refining is mainly focused in China. So that's a lot to think about, and it's a much longer term development to track. However, if anything, like just look at the Chinese stock market and you will know that something's not right there.
Yeah, I mean, compare this with, for example, with the S&P 500, right? S&P is just a one-way trade right now, and it's just been melting up and up and up after breaking out from around here. Likewise, if you look at European indices, let's say like one of the indices, like even the French CAC index, for example, is hitting new highs. The Euro Stoxx 50 index near record highs.
All-time highs.
All-time highs. Euro 600 index, all-time highs. The DAX index, all-time high today. Even the Spanish IBEX, my one that I've been kind of focusing on recently, bouncing off the support area.
That's actually that's something curious that you bring up. If you switch over to a monthly chart, can we look at
of the IBEX?
Yeah.
Okay.
Can we look at the Yeah, we're still far from all-time highs in these.
In Spain, yeah.
Probably Italy and Spain are the ones that
The
are still
weekend,
lagging.
yeah.
Can you go to Italy?
Sure, yeah.
I see you have it pulled up, IT40.
Yeah. Oh, Italy's at a record high.
Well, Italy is better. Yeah.
Yeah, much better.
So
Spain is the lagging
Spain
index.
is the laggard.
Does that mean that it's got potential
not a
for
big
growth?
surprise, considering their recent problematic governments.
Yeah. And the FTSE as well is looking decent. It's been holding its breakout, as you may recall from
the
our
FTSE
previous.
is another one which is not at a record high. So yeah, something to
it's still
watch.
got a few hundred points to go to its record high that was hit in, I think it was in July, in May of 2018. So not too far from there, but it may take it a while to get there because the FTSE is a slow-moving index. It doesn't move too fast, which is what I like about the FTSE. Actually, it's steady. It's is as a steady index as you can get among the major indices, or one of anyway. So that's the situation with indices. Global indices are rising, gold is rising, silver is rising, all because what? Because of the recent weakness in bond yields, because of the actions or inaction by central banks in terms of, the Bank of England, obviously, they decided not to hike interest rates when everyone was expecting them to do so. And that caused UK bond yields to slump. And that led to a drop in the pound and supported the FTSE. And same dovish rhetoric we've been seeing from the European Central Bank, causing the German 10-year yields to drop. In the US, the Fed's move was already expected when it came out. It didn't surprise anyone in terms of tapering. Now, the 10-year US is testing this trend line and the 200-day moving average. So there is a possibility we may see a rebound here, which should be bad news for gold, I've seen. Just as gold is approaching resistance, as we highlighted previously. But all told, I think there is a good... there's a good reason why gold should break out here, because it's had plenty of time to break down, to consolidate and to break down, but it didn't.
If anything, we might see a slight pullback on the test of 130 and
this shaded region here.
But that's something
where do we
watch
go
out for.
Where do we go from here if it does break? And what kind of a breakout are you looking for, Victor?
To be honest, I'm skeptical of this breakout. I feel like we're headed for another correction after we test this area. Between 1828 and 1835. So that's the top that I'm looking at for this cycle, and a fake breakout, and then probably a correction lower. Before we test, we make another test, and probably and possibly a breakout finally. What I'm looking at is the next batch of US data, which this week is very busy. We have CPI, if I'm not mistaken.
We have CPI indeed,
some FOMC members speaking, like a bunch of FOMC speakers, in fact.
Today, yesterday we had some, and today as well.
And we should get some cues as to whether. Well, there are some political factors, like whether the Democrats are going to manage to push their social spending bill, which is controversial in the Senate, and it will be very, very difficult to pass that. So if they don't, I would expect actually the dollar to rally. And we're nearing the beginning of December, another deadline for the debt ceiling. You know how that goes. Usually there is a little bit of risk off as Congress tries to raise the debt ceiling once again. So yeah.
The dollar index, just as we are talking about the dollar, it has reached resistance here, and it's responded so far. It's gone back below last week's high, which is not something the bulls would have liked to see, because last week was a consolidation week. What should have happened was a break and a hold above, in light of the hawkish Fed. Instead, it looks like the market had already priced in a hawkish Fed, and we retrace from there, causing the Eurodollar to bounce back. So I reckon there is still some downside in this from here on the dollar index, at least a little bit more.
Right.
If you look at the daily chart, the support trend of the channel or the wedge or whatever, however you see this, comes in at around 93.60ish, 93.60. So there is a possibility we may go down a little bit more from here into the shaded region before it potentially bounces back. But the bigger risk is if it breaks the trend line and then it goes down significantly. That could happen because of ongoing risk on sentiment, people not buying the dollar because of its haven properties. That could be a reason. Another reason could be because investors are looking through the short-term risks of inflation and expecting price pressures to wane in the coming months because of, for example, a drop in crude oil prices, which is very likely in my view. Supply of oil is going to increase in the months ahead, and there's a potential for Iran to ramp up its production if its nuclear accord is reinstated. Oil prices have consolidated in recent times. They haven't dropped, but they have come off their best levels. So there's potential for oil price to go down in the coming months. That could reduce inflationary pressures. There's supply bottlenecks are temporary in nature. Those factors should weaken and reduce the pressure on prices. So maybe the markets are looking ahead and thinking that perhaps central banks will not be able to, they will not tighten their policies as sharply as the markets expect because of reduced inflationary pressures in the months ahead. And also remember that taxes are going to rise across the world to pay for the huge amounts of stimulus the government unleashed during the pandemic. So when taxes rise, that's gonna hurt consumer spending, I think, and that in turn may weaken inflationary pressures anyway. So the
Hello. I think we just lost Fawad. I don't see. Yeah. Let me take over and share my screen with you guys. All right, so I hope you're seeing my screen. Let's push this through. So yeah, Fawad was speaking about oil. So let me get back to oil. We have seen all the major levels broken and the current conditions in the oil market still favor the bulls. While we had an attempt to correct lower towards the 78.26 area, we didn't manage to reach the key support level, which is around 76.86. So we stopped around 78 and a bit, and we're pulling back up. So from my perspective, this is a very inconclusive trade right now. I don't have a strong opinion and strong view where we're going from here. Hi, Fawad, are you back with us?
Yeah, sorry, I think there was a issue with our internet connection here. I dropped off. Sorry about that. Carry on, Victor.
Yeah, the developed world internet problems. I wanted to jump over to the indices.
Yeah.
After we, there is something very interesting going on. I feel in Japan and with the Japanese yen, which continues to rally despite our risk-on environment. Stock markets marking new highs, U.S. stock markets marking new highs almost daily. Something's going on with the yen. The yen keeps rallying for some reason. The Japanese index stopped in its tracks. Just let me go back to the indices charts, and Japanese index has paused its ascent, and I think this is signaling us something. If the export-oriented Japanese economy is topping out, we might see a slowdown in trade. We could be seeing it because of shipping problems all over the world, which are widely covered by the mainstream media, or we could be actually seeing something more serious. So with inflation actually hitting consumers' pockets and demand falling. What do you think, Fawad? Which one of the two is it?
I think it could be a combination of both, really. To be honest, I don't really follow the Japanese markets that closely, but I think you nailed it on the head. It could be one of those reasons. There's so much monetary policy can do to support the economy.
Right, and the irony. I was looking at a very curious article the other day about Tesla, which has increased the prices of its base Model 3 by $1,000 just about a week after it increased it by $2,000. So I guess that the material costs are playing their part there, and if Tesla's initial goal was to deliver the base Model 3 for $35,000, it now costs around $45,500. Ironically, before this whole crazy stimulus started, continued since the beginning of this year, we had prices for the Model 3 around $8,000 lower in the beginning of this year than the current price. That's a very significant increase in price for a supposedly mainstream vehicle that Tesla is selling to the market. Passing tax credit for all EV purchasers by the Democrats last week. It does nothing but subtract $7,500. But when the price has increased $8,000, that's actually net zero for the consumer.
Right.
all the money just goes to maintain the same price. And what are we really doing with these policies? Stimulating demand to increase inflation.
Isn't that what the Japanese government is trying to do anyway?
Well, it's been at
engineer
it
inflation.
for several decades now.
Finally working, right?
Hasn't worked too well, I guess, because they have been able to export that inflation out of the country by generating probably the most efficient production of several machineries and consumer products that are very hard to engineer.
Absolutely. Let's have a look at.
So, do you want to go back to your chart? Or?
I think we are okay with your chart. Let me see if I can pull my chart back. I think it's closed. Oh yeah, it's there. It's there. I can share my screen. Shall I stop sharing yours?
Sure.
Okay. Number 2, share. Okay. So where we left off was looking at the dollar index. I'm not sure if you covered any of the major currency pairs, Victor.
No, I haven't.
Yeah. Let's cover a few of them. Let's start with the Japanese yen because you're talking about it. The Japanese yen is broken down from its recent consolidation range, so there's a possibility we may see a deeper pullback here and retest of the 2020 high. That will be the key support level I'll be watching because previously it was major resistance, the pre-pandemic high. We broke above that level in when was it? In the start of October. That level is going to be a key level of support or potential support to watch out for. In fact, it's going to be this region here. If I mark this area, this whole region is going to be key support zone because that level was resistance as well before breaking out. So anywhere somewhere around in this region is where I'm expecting a rebound in dollar yen. So in the short term, there's a risk that we may see further weakness, and with resistance coming in at around this level here at the 113.20-ish, which was previously support. Eurodollar is still looking weak because of a very dovish ECB. We haven't really retested the 115, 149.95 level that we were previously anticipating. Price came very close to testing that level before bouncing back. I think there's a risk we will get there.
It still seems likely. The ECB has definitely taken the most dovish road it could have possibly taken. So I was actually surprised that the market didn't reach that 115 level. But now that we had this pullback, we might actually see an attempt to trade lower.
Yeah, the only thing I'm looking out for is, there's always a possibility that the market is bottomed out. On when was this? 5th of November, on Friday, the Eurodollar created this hammer candle off of the previous low, thereby creating a potential false break or double bottom reversal pattern here.
Right. And now it's about to form a reversal hammer candle.
A reversal hammer. If it can get through this blue level, though, because that level is the hammer head. We broke above it and closed above the previous day. So now it's coming back down to retest that level, potentially retest it. It will need to close below that level before we turn bearish on the Eurodollar again. Otherwise, there's a risk that we may see.
Wanted to highlight something from a fundamental standpoint this morning. We had the release of the German ZEW economic sentiment index, which blew out of the expectations completely. And that wasn't enough to help the euro hold above 116. So when good news stopped working, I'm starting to feel worried.
Right.
So yeah, if you go to the hourly chart, actually we can we can see that attempt above 116 after the news, which is like 2 hours ago, or thereabout.
Yeah.
And nothing happened. So 116 remains like there's a sufficient amount of offers around 116. Sellers keep pressuring the bulls into covering their long positions, and I expect them to start covering once 115.73. Once again, the blue line which you highlighted is broken.
Yeah, this remains a key level of support, and we've really moved away from it. We do need, as Victor mentioned, that to break that level and hold below before turning bearish. On the upside, obviously, while the fundamentals look weak, you should always be prepared for something that doesn't quite make sense to happen, right? Which is a Eurodollar rally. The markets can be irrational at times.
The markets can remain irrational longer than you can remain solvent.
Indeed, that's always the case, or always the risk. The pound has also turned lower. Interesting reaction as we retested this level. So
yeah,
always,
we
on a side note,
revisited 136 and back down.
On a side note, always mark out these levels where previously the market had rallied away from, and then we break below it. Usually such levels offer at least a tradable bounce. So in this case, you could have gone short right there at 136 and made about 40 pips from that. Obviously, I'm not discussing risk management here or providing trade advice or anything like that. I'm just saying that usually around such levels, there's always opportunity. And if you feel missed out, if you feel that you missed this move, perhaps waiting for a move above it and then trying to go long on the retest of this level would be a better idea in my view, because I am bullish on the pound, but at the moment,
you're cautiously bullish on.
I'm cautiously bullish. I need to see more evidence that prices have bottomed out, because at the moment it's still making lower lows and lower highs on the daily.
I would like to see another test below 134.
134, yeah.
To attempt a bullish trade on the pound. Though I suspect that we might actually be looking at a complete reversal. I'm just really looking forward to those CPI numbers out of
after the
US. The situation there is getting worse by the day. And I have some friends in the US which are sending me pictures of prices changing daily. And we're talking coffee prices. We're not talking something extraordinary.
Really, that's
so. So there is there's definitely. I feel like the inflation genie is out of the bottle,
right?
And the U.S. The U.S. population is actually voting with this in mind. We had the Democrats get decimated at the election in Virginia, which again I think come midterms, which are only a year away. Come midterms, all the government spending in the US could suddenly stop, because we will have a Democratic president and a Republican Congress, which always means that spending is pretty much done, and the dollar usually rallies.
So there's that risk as well to take into account. Excellent. So there is a possibility we may see the dollar come back as it tests support against a number of major currencies, and as gold tests resistance. So please bear that in mind.
Shall we have a quick look at crypto?
I was just gonna say, because crypto is the the market we haven't covered yet. And as we had
The
expected,
elephant in the room.
indeed, as we had expected, it broke out to a new record high.
Yeah.
After
Question
breaking
is
out of this consolidation zone.
whether it's going to trap some buyers here or not.
That's always a question. The answer is we don't know. But if it happens, we would know to be more cautious. So going forward, I think it's worth keeping an eye on in this area here. 1 second, let me just draw it. Around here somewhere is where we should expect the next rebound to take shape. If it doesn't happen and we move on, if we eventually go below 60,000, then at that point, this might look like a potential reversal.
Right. Yeah, that's I couldn't agree more. I feel like this market is overly extended, and we had none other than Peter Thiel come out a couple of days ago and say something like, yeah, he thinks that Bitcoin is the future currency and all that, but he wouldn't be piling all in around above $60,000.
Right. Makes sense. I mean, it's getting very expensive at these levels. Any other coins that is catching your attention? For me, it's Ethereum because it continues to show a strong trend, shallow pullbacks and continuation higher.
Well, Ethereum has been amazing. Solana has been amazing.
Very nice price action, by the way, in Ethereum if you're trading it.
It's a very trend-friendly
trade.
Trendy.
Yeah.
So let's just for example, buy the F dips and everything goes well.
Exactly. So for example, resistance here, resistance break above, retest, held. Same with this level. Resistance before, resistance again, broke above, retest, held, and we moved on.
Yeah.
The next level to watch is this blue level, 46.68, around that level. So if you retest that, then I think that will take us to 5,000.
Yeah, I've been very keen on Solana as well, which
Solana.
has been.
Where's Solana?
So yeah, there you go. It has been relentless in trending higher over the past month and a half, but it's a little bit more volatile than Ethereum.
Just a little bit.
Speaking of volatility, let's look at the top dog, which isn't Dogecoin anymore.
Oh no, it's this one, right?
Yeah. I see this chart and I'm thinking that this is a complete meltdown. It looks really bad.
It does indeed.
I feel like after this rally from the last pull up from 45, well, I don't know what's that. It's not cents. It's fractions of cents. But anyway, well, let's just stick to 45, and let's just. The fact that after this rebound we haven't seen a new high is very worrisome. We have only seen lower and lower highs.
It's kind of bleeding lower after that. That impulsive.
So this looks like it's going back to 20 or something like that. For now, at least, I don't know. I might eat. It may make me eat my words tomorrow morning or today in the afternoon.
Yeah, with meme coins like Shiba or whatever it's called, it's not. It's really difficult.
There is no fundamentals.
There's no fundamentals. Just pure speculation.
Pump and dump scheme that you just will be very lucky to end on the right side of it if you jump into something like that. So be very mindful when trading such cryptocurrency.
Absolutely. Okay, let's move on then from cryptos, and I think we've covered everything actually, haven't we? We've touched on indices, forex, and time has run out. And if you have any questions,
do we
please ask
have
now.
any questions? Yeah.
There was a question or a comment saying very educative. Thank you so much for that. We have a few people in the room, so if you have any questions, now's your chance. While you're writing your questions, let me remind you that you can join us live for those of you who are watching a recording of this by going to thinkmarkets.com, market analysis, live webinars. And from here, you can register for one of our upcoming webinars. I'm having the same IT issue again. My internet's not working very well today, so.
No, we hear you well.
You hear me?
It's
okay.
good.
I think it's the website. Yeah, it's the website. Anyway, on that note, let's leave it here. Thank you so much for joining us. Please make sure to join us next time, same time, next week, same time at 11:30 London time. And for those of you who are watching a recording of this, please don't forget to like and share. For that will encourage us to provide more content like this. Take care and have a wonderful week.
Take care. Thank you for joining us.